Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lennox International Inc. Annual Report. Lennox International Inc. offers a wide range of businesses and services across various markets. In the Home Comfort Solutions segment, the company provides products such as furnaces, air conditioners, heat pumps, packaged heating and cooling systems, indoor air quality equipment, comfort control products, replacement parts and supplies, residential heating, ventilation and cooling equipment, evaporator coils, air handlers, and unit heaters under various brand names. In addition to these products, the company also offers services such as installation and service of commercial heating and cooling equipment. The Building Climate Solutions segment provides a broader range of products including unitary heating and air conditioning equipment, applied systems, controls, variable refrigerant flow commercial, curb adapters, drop box diffusers, HVAC recycling, and salvage service. The company's product offerings also include condensing units, unit coolers, fluid coolers, air-cooled condensers, process chillers, compressorized racks, and replacement parts and supplies under various brand names. Furthermore, Lennox International Inc. provides small package units, rooftop units, chillers, air handlers, and fan coils to its customers. The company sells its products and services through direct sales, distributors, and company-owned parts and supply stores. With a rich history dating back to 1895, Lennox International Inc. has established itself as a leading provider of heating, ventilation, air conditioning, and refrigeration solutions in the United States, Canada, and internationally. Unfortunately, I do not have access to the text you provided. However, I can still provide a general overview essay on what might cause a stock price to drop. The decline of a company's stock price is often a complex issue with multiple contributing factors. One possible reason for a decrease in stock value is poor financial performance, such as declining revenue or profits. This can be due to various reasons, including increased competition, inefficient operations, or failure to adapt to changing market conditions. Another factor that may contribute to a drop in stock price is negative news and publicity surrounding the company. This can include scandals, product recalls, or other controversies that damage the company's reputation and erode investor confidence. Additionally, changes in industry trends or regulatory requirements can also impact a company's stock price. If a company operates in an industry that is experiencing a downturn or undergoing significant changes, its stock value may suffer as a result. Lastly, external economic factors such as recession, inflation, or global events can also affect a company's stock price. These macroeconomic conditions can have far-reaching impacts on various industries and companies, leading to a decline in stock value. In the case of Lennox International Inc., without access to specific information about the company's performance and industry trends, it is difficult to pinpoint the exact reason for its stock price drop. However, these general factors may provide some insight into possible causes. Lennox International Inc. market capitalization of $19 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Lennox International Inc. holds a significant advantage in their industry. Lennox International Inc. trades at a higher price-to-earnings ratio of 24 times and a higher price-to-book ratio of 16.57 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 76% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of the key factors that have impacted an organization's financial performance. Revenue growth is primarily driven by strategic investments, such as differentiated growth initiatives, digital innovations, and acquisitions. These efforts have led to increased sales volumes, favorable price and mix, and improved attachment rates for parts and accessories. The acquisition of Duro Dyne and Supco has also contributed significantly to revenue growth, with an increase in net sales of $42 million. On the other hand, revenue decline is often attributed to external factors such as employee turnover, labor relations issues, and failure to keep pace with technological developments. Weather patterns, price volatility for commodities, supply chain disruptions, and supplier capacity constraints have also contributed to a decrease in revenue. Additionally, a decrease in sales volumes and an increase in price and mix have negatively impacted net sales. Overall, the organization's ability to adapt to changing market conditions and invest in strategic initiatives will be crucial in driving future revenue growth or mitigating decline. The net income of a company underwent significant fluctuations between 2023 and 2025. Initially, it increased by $221.1 million from 2023 to 2024, indicating a positive trend. However, this growth was short-lived, as the net income decreased by $188 million from 2024 to 2025. Furthermore, when considering the broader time frame of 2023 to 2025, the net income actually increased by $15.8 billion, suggesting that the decrease in 2024 was a temporary setback. The profit margins also experienced changes during this period. The gross profit margin and operating income margin both showed improvements, increasing by 10 basis points and 50 basis points respectively from 2024 to 2025. This indicates that the company's ability to generate profits from its sales and operations improved over time. However, the net income margin is not directly stated in the provided information, but it can be inferred that various factors such as increased expenses and decreased revenue contributed to the decrease in net income. The company's financial performance indicates a consistent trend of generating positive operating cash flow over the past 3 years. The data shows that in 2025, the company generated $757.6 million in net cash provided by operating activities. This is a notable figure, but it pales in comparison to the $945.7 million recorded in 2024. However, what's more encouraging is that even in 2023, when the figure was lower at $736.2 million, the company still managed to generate positive operating cash flow. A closer look at the data reveals a slight dip in 2025 compared to the previous year, but it's worth noting that the company still maintains a strong position in terms of generating positive operating cash flow. This suggests that the company has a stable financial foundation and is capable of managing its operations effectively. The performance of various segments and regions within the company has been mixed. On a positive note, Home Comfort Solutions demonstrated strong growth in 2025, with net sales increasing to $3,097.4 million, up from $3,346 million in 2024. The segment also saw an appointment of a new executive vice president and president, indicating a shift towards improved leadership. However, the same segment experienced a decline in net sales by 7% and a decrease in segment profit by $32 million. This contradictory performance suggests that Home Comfort Solutions is facing challenges despite its initial growth. Building Climate Solutions also showed mixed results. The segment as a whole performed well, with net sales increasing by 5% and segment profit rising by $33 million. However, the heating and cooling products subsegment within Building Climate Solutions struggled, with multiple competitors listed, indicating a competitive market that may be affecting its performance. Overall, while some segments and regions showed improvement, others faced challenges, highlighting the need for further analysis to understand the underlying causes of these disparities. Management is emphasizing a multifaceted approach to maintain the company's leading position in North America. They aim to provide a comprehensive range of home comfort solutions with varying designs and efficiency levels at different price points. This strategy will enable them to expand their product offerings, particularly in commercial HVAC solutions, through strategic acquisitions such as AES, Duro Dyne, and Supco. To drive revenue growth, management is focusing on organic expansion, selective investments, and effective pricing and cost management. They are also investing in sales force development, digital innovations, and a new commercial HVAC factory to enhance customer experience and attachment rates. Furthermore, the company will continue to prioritize research and development to ensure future success. Management expects strong results, with net income projected to increase by 37% in 2025 compared to 2023. They are confident in their strategy, which includes a combination of third-party insurance and self-insurance plans to manage risks. Overall, the company's outlook is optimistic, driven by its commitment to innovation, expansion, and customer satisfaction. The company has made several strategic acquisitions to expand its business operations. Notably, Durodyne was acquired in both 2023 and 2024, while Supco and AES were also acquired in 2023. Additionally, the company acquired European commercial HVAC and refrigeration businesses, although no specific date is mentioned. In terms of divestitures, the company has sold its European businesses on multiple occasions. In Q4 2023, it sold its European businesses, which was part of its corporate and other segment. Furthermore, in 2023, it divested its European businesses, including commercial HVAC and refrigeration operations. The company has demonstrated its commitment to returning value to shareholders through various means. One key aspect is the payment of dividends, which has been a consistent practice over the past few years. In 2025, the company paid out $173 million in dividends, building on previous payments of $173 million in 2024 and $153.4 million in 2023. In addition to dividend payments, the company has also engaged in share buybacks as a means of returning value to shareholders. Notably, in 2025, the company repurchased 0.9 million shares at a cost of $482.3 million. This strategic move not only reduces the number of outstanding shares, but also supports the company's stock price by eliminating excess supply in the market. Concerns about inventory buildup and supply chain disruption are evident in the extracted summaries. The data suggests a significant increase in total inventories from $853 million to $1.15 billion between 2024 and 2025, indicating potential supply chain issues. Inventory levels have also shown a notable buildup, with finished goods inventory increasing by 66% from $431.3 million to $719.1 million. This is further supported by the calculated difference in inventory levels using LIFO, which shows an inventory buildup of -$170.20. Additionally, specific instances of inventory buildup are noted on pages 52 and 88. Supply chain disruption concerns are also valid, with potential issues arising from global supply chain constraints, supplier inability or unwillingness to meet demand, and disruptions at facilities or in the supply chain. The impact of extraordinary events such as conflicts, wars, and natural disasters is also a concern for global supply chains. That concludes the financial summary for Lennox International Inc. Feel free to comment below, and I will be happy to answer them when possible.